This house that you guys are looking at right behind me, we last looked at about 2 months ago, right over here in Surfside, Florida, and they originally started off asking almost 1.8 million when they first listed this house back in June, and then they did one price cut, brought it down to about 1.7. The place recently just sold on October 14th for $1,420,000, which obviously is significantly less than what they were asking. They took over $300,000 off of the asking price. So I'm sure the buyer feels like they got a pretty good deal here. But honestly, guys, when you look back just to July of 2021, the previous owner bought this same house for only $844,000. Who really made off okay here and who really did well? I'm pretty sure the person who just bought this house is going to be the one holding the bag, and it'll be interesting to see if they attempt to flip it once again, just like the previous owner. Now, I think since this is a mostly real estate based channel, then it would be a good idea to make a 2023 housing market prediction video. And I have 10 predictions that I want to go over with you guys in today's video. And just keep in mind that these are just my own thoughts and opinions, guys. These are just based on all the things that we've been talking about here on the channel and where I think things are gonna go next year. Some of them might happen, some of them might not. So just keep that in mind. This is all just hypothetical what ifs. So my first prediction is that inventory across the board all over the country is going to continue to go up. So for the longest time, we've had an inventory shortage during the pandemic boom of the housing market. And now we are already starting to see housing inventory slowly start to inch up. Now, we are not at pre-pandemic levels just yet as of October 2022, but I do think that at some point into 2023, probably by summer next year, then we will probably reach pre-pandemic levels of housing inventory, if not maybe even higher numbers, because we've had 8 straight months in a row this year of fewer and fewer home sales happening across the country. And if that trend continues and inventory slowly continues to rise up, then this is going to end up flipping the situation into a buyer's market probably by the middle of next year. Now, the timing on that could change, but based on what's happening right now, I think that's the direction that things are headed. The next prediction is interest rates are going to continue to climb. We have seen interest rates go from the beginning of this year to below 3% to now the average 30-year fixed rate, guys, is almost 7%. And like I said a million times, that's not really the average. That's just what they call the average, but it's not average at all because only premium borrowers get these 6.9% rates that they're offering right now. Most people are going to be much closer to the 8% range. And I think within the first quarter of next year, we're going to see average rates for most people be somewhere in the 9% range. Earlier this year, I predicted that by the end of the year, we'd be at 7 to 8% rates, and we're already there. So I think it's safe to say by the beginning of next year, we're going to see rates well into the 9% range. So you think the housing market's starting to cool down now? Just wait a few more months. It's going to continue to cool down, guys, because the Fed is going to continue with their interest rate hikes. And even though the interest rate hikes that the Fed does are not directly correlated to mortgage rates, it affects the 10-year Treasury bonds, and that's what ultimately determines where the 30-year fixed rate mortgages go. Some Halloween decorations with the Corvette. And I understand that this puts a lot of financial pressure on people that just need to buy a home for one reason or another. And honestly, I feel bad for you because I think that everybody should just be waiting it out right now. I mean, what's the rush? When we have this situation where everything is starting to get flipped upside down once again, I think it just makes sense to wait at least 6 more months and see what happens, guys, because I think in 6 months from now, we're going to be looking at a much different housing market than what we're looking at today. My third prediction is that we're going to see more and more buyers choose to wait out the market simply because of the dynamics we just talked about. as we continue to see interest rates go up, what happens is those interest rates do their job. And their job is to deter people from taking out loans in order to try to curb inflation. So you're going to see these ultra high mortgage interest rates, scare away most people from the market. And also, to hit everything with a double whammy, you're going to see people get scared to buy, because as prices keep getting reduced across the board, a lot of people are going to say, well, why should I buy right now? Interest rates are super high. Everyone's continuing to lower their prices. I'm seeing homes in my neighborhood getting sold for less and less, as the months go by. I mean, why should I buy now? I think it's going to go lower. And that's exactly the mentality that many buyers take, because when I started my real estate career back during the last housing crash, okay, I got my license in 2009. Things were still going down. The market was still crashing then. And a lot of the times what I would hear from a lot of my buyer clients is, I want to see what's out there. I want to look, but I'm not ready to buy yet because I think it's just going to continue to go down. And it did continue to go down for a little while. From 2009 to 2011, depending on which condo or which neighborhood, you would see prices go lower. There were some places that kind of held their value a little bit better than others. The more desirable buildings and the more desirable neighborhoods didn't get hit as hard because the demand was higher. You have more people willing to buy at that price and take the chance, versus when you're trying to unload a less desirable property, people want it at the most bargain basement price that they think they can get it for. So I think overall, you're going to see a lot of buyers wait this out. As you see the interest rates climb and as people see prices going down, those two things are enough to scare away a lot of people from taking a chance on the housing market. The next prediction is, I think we're going to see less investors jump into the housing market in 2023 for a lot of the same reasons that we just talked about for regular home buyers, because obviously investors are looking to get the best return possible. And how do you do that? You buy the property at the lowest price possible. You get the best interest rate possible if you're financing, as well as the fact you want to be able to rent the property for the highest price possible. So investors are going to be looking for those opportunities, and you can probably bet that the investors that are going to be buying in 2023 are going to be making all kinds of lowball offers, because they know they could be the ones catching the falling knife, so to speak. And if they're going to be the ones doing that, then they're going to want a nice deal and try to kind of mitigate their losses right up front in the form of a lower price, okay? But I think you're largely going to see a lot of investors wait it out to just see what's going to happen and see, are these going to be the best deals that we're going to get, or is it going to get even better? Because next year is definitely going to be the turning point for the market, and everybody's going to be kind of watching and waiting to see what's going to happen, including investors. And in speaking of real estate investing, this brings us to today's video sponsor, Honeycomb Insurance. If you're a landlord, you've probably seen your insurance cost increase more than once over the past few years. And this year, insurance rates are skyrocketing, especially here in Florida. Now, Honeycomb is a special insurance just for landlords, so this doesn't apply if you're just looking for homeowners insurance or renters insurance. Honeycomb caters specifically to landlords who need reliable, fast insurance on their investment properties, and Honeycomb is able to offer rates that are sometimes as much as 40% below most insurance companies. Traditional insurance carriers price policies based on a number of factors, the main one being them wanting to hit a certain loss ratio. This impacts you because, say if you live in Sacramento, for example, your premium might be compensating for losses that occurred in Austin, Texas. Your premium might even be covering losses occurring on auto insurance. Honeycomb focuses solely on landlords and rental property insurance. So that's one of the main differences between Honeycomb and other insurance companies. So if you're a landlord and you're getting crushed by these current insurance rates, go ahead and check out Honeycomb. I have a special link for everybody interested down in the description of this video. Now my next prediction is kind of ties in with the last two, and that is more people are going to continue to look at renting because of the volatile housing price situation, especially when it comes to interest rates and people just not knowing what to do. And it makes more sense to jump into a lease for a year for a lot of people that are confused on which way to go, rather than bite the bullet too early on a property and then have buyer's remorse. And we've talked a lot about that on the channel as well. So I think a lot of people who are confused and are sick of the FOMO and are tired of seeing, you know, the price go up, the price go down, not sure where the interest rates are going to go next, and all of these things, I think you're going to see a lot of those people just decide to call it quits and just rent for another year and see how it goes, because that's going to be the easiest way to kind of just be on the sidelines and see when might be the right time to buy. And honestly, we're already starting to see rent prices come down as well. I would say that into 2023, renters are going to be able to start getting better deals than they were able to get in 2022, which is also going to make renting look more appealing. Next prediction, are you ready for it? This is a bold one. I predict that 1 year from now, so we're talking October 2023, that home prices on average across the country, and there may be some outlier markets, but in general and on average, guys, I think home prices are going to be 20% lower a year from now than they are today. Now, I could end up being wrong on that one. There's a lot of things that could come into play that can change that. But at this current pace, at the amount we're starting to see property values go down about 2% a month, we're right on track to be there, essentially. Speaking of houses for sale, this house just sold for $1.1 million after a few months of asking $1.3 million, and the previous owner bought it for $370K 10 years ago. Looks like somebody's trying to get this house demolished, maybe. We got some kind of special notice in the yard. I'm just looking at simple math and the data that we have available to us right now. If we just look at the home prices going down on average about 2% a month, 2 times 12 is 24, guys. That's 12 more months. So 24% decrease we could be seeing in a year from now. And I'm saying 20% just to be on the conservative side. So it will be interesting to follow up on this a year from now to see what actually happened. And like I said, I could be wrong. It could be worse. You know, it depends on how bad this recession gets. And speaking of the recession, that ties right into my next prediction, which is that because I think that this recession is just getting started, by a year from now, the recession will be in full swing, and the economy in general is going to be much worse than it is right now. And we already see all these companies who are announcing they're going to be having layoffs over the next couple of months. So you're going to see a lot of people get laid off between now and the end of the year. And I think we could see even more layoffs going into 2023 as stock prices and share prices tumble and housing prices come down, and people, they're losing their stock market portfolio wealth. They're losing their home equity wealth. You know, when everything kind of starts tumbling down like that, it just creates this domino effect. And that's when I think we're going to start seeing next year, unfortunately. Let me know if you guys are interested in seeing a video about the pros and cons of this housing crash that's coming, or this economic meltdown, if you will. Because, you know, a lot of people say, oh, Michael, this is all bad news. I'm tired of hearing the bad news. But there's also positives to this too, guys. So let me know if you want to see a video like that. Next prediction. The cost of everything related to housing is going to continue to go up. And we're talking everything, guys. We're talking about utilities, we're talking about taxes, talking about HOA dues, we're talking about insurance rates, we're talking about repair costs or services you might need for your home. Think like pest control, termite services, lawn care, whatever. And on top of that, the materials that you're going to need for potential repairs on your home will also cost more as well. Because inflation is just starting to ramp up and it seems to come in waves, I think we're going to see inflation continue to persist and be a big problem in 2023. And obviously nobody wants higher property taxes or higher HOA fees or higher insurance, but all these things need to be paid in order to own a property. And all of these things are going to continue to get way more expensive. And I know this firsthand because I'm going to make a full dedicated video about this, because we are seeing this happen right here in my condo here in Miami Beach. So I'm going to share that with you guys in a separate video. So I actually have proof that a lot of these expenses are going to skyrocket into 2023. And it's not just going to be exclusive to condo owners. It's going to be all homeowners are going to be experiencing these increases. Next prediction. Another reason I think the housing market will slow down is because since inflation and the recession will be in full swing in 2023, a lot of people are going to start prioritizing the basic things in life, like I need to provide food for my family, I need to keep the lights on, I need to keep the bills paid. You know, the water bill is higher now, the natural gas bill is higher now. All these things cost more than they did a year ago, and I need to forget about looking for a new place to live. I need to worry about just keeping the one I have. And I think that's going to be the concern for a lot of people next year, especially because of the layoffs and the instability that we could see in the coming year. And when there's a lot of uncertainty, people kind of hunker down, which is the smart thing to do. You know, just like we saw as soon as the pandemic hit, you saw people moving and closed sales for real estate, everything come to a complete halt. And while I don't see this being quite as dramatic as that, I do think we're going to see the same general sentiment and thing happen among people who might have been thinking about moving now in 2022, but now that life just got harder and more expensive, they're just going to say, you know what? We're just going to stay where we're at and try to survive where we are, because things are already tough enough here. You know, we have to save money to move. Moving's expensive. I mean, probably costs like on average $5,000 for people to move, you know? And if you're living paycheck to paycheck or having a hard time just affording the groceries or the electric bill, you're not going to be moving. Now, my final prediction is that by the end of 2023 and maybe even bleeding into 2024 is when we're finally going to start seeing the best deals start to come on the market, because after the recession is in full swing and the cumulative effect of everything that we just discussed is in full force, that's when you're going to start seeing the best deals. Because just think about it, guys, if my prediction comes true that prices are 20% lower and interest rates are still high like they are now, but there's a ton of inventory on the market, a lot more things for buyers to choose from, sellers have to get realistic with the asking price and can't get away with multiple offer situations and no contingencies and all of that anymore, it's going to be a much better time for people to jump back in and look at buying. I'm not saying it's going to be the best time, but it's when things are really going to start turning around and looking more favorable for buyers in general. And you know, people who have been patient and have been saving, keeping their credit score high and staying out of debt this whole time and just stacking away cash in order to make that purchase, I think that's when people like that are finally going to get rewarded by this time next year or into 2024, as the market just becomes more of a buyer's market in general and people have sort of accepted the new reality of where we're at with the economy and the housing market. So definitely share your thoughts and opinions on my predictions. Share a prediction of your own if you have one that I didn't mention already. You know, I love hearing from you guys and what you have to say about it. We always keep a great discussion going down in the comments section. And if you want to make sure you always catch my next video, make sure you click the bell notification down below. And if you don't want to wait for that, check out my next video right over here, and I'll see you in the next one.